Is that a bear market? Is it a sideways consolidation? I don't really know. I think the low was in last year, and I don't think we go back to that. I actually think that we're probably still in a kind of the first phase of the next bull leg up. That's what it feels like to me.
With Bitcoin once again below $40,000 and increasing fears that the coin will crash to $20,000 or less, Real Vision CEO Raoul Pal has given an important update on the Bitcoin market. In a recent interview with Bitboy Crypto, Raoul discusses inflation, rising interest rates, and other macro issues that could affect Bitcoin. Raoul points out three important factors, including how the economy might be playing a huge role in the current market situation. He also gives an important update on when and how prices will improve. This video promises to be an enlightening one for all investors. So assure you watch it to the end. Hit the like button and drop your comments and observations below. Thanks and enjoy the video.
Where do you kind of see us in the movement of Bitcoin? Are we still in a bull market? Or do you consider this a bear market? Do you not really think about those polarizations? Just how would you summarize where we're at?
The answer is I don't really know, and I'm not sure it matters.
Yeah.
It kind of like, if we're looking at the longer time horizon, for those of us, there's two types of people in this market. There's traders and there's long-term holders. I'm a long-term holder of crypto assets. I tend not to trade around them. So my view is, where are we going from here over the next 5 years? And it's up. So everything else is noise. But, the market fell 50% last year and then went up to the highs, back down 50% and kind of retested the low, didn't make a new low. And it's kind of been slopping around. It tries to go higher and then doesn't do it, then tries to go lower, doesn't do it. And my general view is that I think it's the economy that's doing this. So this is where macro and crypto come together. A lot of people don't realize that macro has a big impact. So what am I talking about? I'm talking about the fact that inflation has gone up. So a bunch of people watching this video now will have noticed that their wages haven't gone up as much as cost of goods, so they've got less money to spend. So if you're dollar cost averaging in, or you want to buy NFTs, or whatever you're doing in the crypto space, you don't have as much money. So that took money out of the market. And then interest rates are going up. So people who've got mortgages or rents, they've gone up as well. So there's less money coming in. So when I look at the kind of volumes in crypto and the value exchanged, it's not going up. It's just trading sideways, which is why the market's in this big sloppy range. There's nothing really happening. So that's what I think is going on. Is that a bear market? Is it a sideways consolidation? I don't really know. I think the low was in last year, and I don't think we go back to that. I actually think that we're probably still in a kind of the first phase of the next bull leg up. That's what it feels like to me. But we need to see something change. Now, what is the thing that's going to change to do that? My guess is if the US economy or the global economy starts weakening, then the market's going to say, oh, there's going to be less rate hikes than expected. And therefore, that tends to be good for crypto or technology, kind of Cathie Wood style technology investments. So I think at the margin, it's those kinds of things. But the market's still struggling with, how do we deal with this? The stock market's the same, right? It's up and down, and it just can't figure out, how long is this inflation going to last? What does it really mean? How much are interest rates going to go up? And how much have they already been priced in, i.e. the rates have gone up anyway? So, it's a really complicated macro situation, but I think crypto's done pretty well, considering you've thrown a war, 8.5% inflation, you've thrown Chinese bans, you've thrown all sorts of stuff at it, and it's kind of in a big range. Generally, the oil price hasn't been making new highs and stuff like this, and the economy's weakening. All my forward-looking data of the economy's weakening, so inflation should start coming off anyway. But I think they are more, if the economy's weakening and inflation's still at 4%, that's what we had in 2008, and the Fed started cutting.
Yeah.
It depends how weak the economy gets. So that's the key thing. Everything else is a red herring. If the economy starts looking like it's weak, then all bets are off and the whole narrative's going to shift. And that's very, very bullish crypto. So if you've got to think of it, with rates at their highs now and maximum fear and maximum pessimism, the outcome most likely to happen is not everybody's fear. It's actually the bond market cools off, inflation comes lower, interest rates start falling, and that's very, very bullish. So I'm actually more bullish overall. And I've been buying technology stocks for the same reason. Yeah. I just start to think everyone's so bearish and they all hate it that the chances are it goes up.
We can pick two important points from what Pal just said. One, it's all noise. Bitcoin might be below $40,000 today, but in 5 years we will be talking about considerably higher prices. Two, there are a lot of macro issues in play here, especially with the US inflation at a 40-year high. Notwithstanding, the macro guru believes there are already signs that the economy is weakening, which would mean lower interest rates and more confidence in assets like Bitcoin. Do you see this happening anytime soon? Please let us know in the comments section. Back to Pal's interview. While he is bullish in the mid and short term, Pal also believes that Bitcoin could still drop below $30,000 in the short term. Please listen as Raoul talks about the impact of institutions like MicroStrategy and how they have changed the Bitcoin market.
I think the market's changed
Okay.
because of institutions. Institutions and hedge funds are in the market, and people like Michael Saylor are in the market, and people like Do Kwon at Terra are in the market. That didn't exist before. So before it was retail. So retail rush in, they get over euphoric, retail rush out, they panic at the lows. But here we've got different participants, which is why I think it's dampened the downside. So let's say you're right and we are in the bear market. There's no reason to assume it's going to go down 80% this time.
I agree.
And so I looked at this with Amazon, right? So this is a network model, much like crypto is. Amazon, as soon as it launched, 2001, went down 95%, much like Bitcoin did. Then it goes up to new highs, then it falls down 65%, then another 60%. Then after that, the corrections were much smaller because more people are participating in the market. And before you know it, the corrections are 30% and now 20%. And I think that's true. So you could still be right that we're in the bear market, but maybe the downside is 50 to 60% as opposed to 70 to 80%. That kind of feels like that makes sense.
Yeah, and I mean, I'm tracking with you 100%. I do agree with that. I don't think we're going to see, like, I think we could go back down and test 29,000. I don't see us necessarily going lower than.
And they also tend to rebalance because they had a decent year. They rebalance at the end of the year. I did kind of warn people about it. I didn't warn myself because I was,
I remember you were on the show talking about that. I'm pretty sure last time you were on for an interview.
Yeah, and I bought ETH calls thinking, it's going to go higher. But retail came out in May, and the reason they came out in May was because inflation started rising. And so people had less money in their pocket. So we just saw less activity from retail. But the institutions have been there. And I've set up a fund of hedge funds that invests in crypto hedge funds. That money goes directly into the market because you give it to a hedge fund and they invest it. So I know I'm seeing institutional asset allocation. I'm speaking to all the biggest pension funds, family offices, banks, everybody. And they're all setting themselves up. People are starting to allocate capital. People keep thinking there's going to be a wall of money where one day everybody comes in at once. It doesn't work that way. It's like a tide that comes in, and before you know it, you're that deep.
That's how you get the parabolic movement at the end.
Exactly. And then what happens is, the parabolic moves happen once you start to see the price move. I know that sounds ridiculous, but right now retail will come back in if they sense they can make money. But they won't do it if they can't because they can't take the risk. I mean, there's still a lot of interest and nobody's freaked out by the price action.
Right.
But people are doing other stuff, right? Because it's not going anywhere. So they're focused. The people who remained in crypto have gone to NFTs. They did the other layer ones for a while and now they're all punting NFTs because everyone's looking for a bit of adrenaline. How do I make some cash? So they're doing that. Others have just kind of stopped doing stuff and walked away, whether they've taken their money out or just leave what they've got in and they go about their business doing other stuff. So yeah, definitely interest has waned. It's because price action. As soon as price action starts picking up, I don't think it even needs to get to 60 something thousand because so many people are so waiting for the next run. My guess is by the time it gets to like 50, 55, you're just going to see everybody piling in. And that's institutions too, who've all been waiting and watching. Like, we're in no hurry to do it. But the moment it starts going up, it's like everyone's going to scramble to get in.
Pal has noted some important ideas in this interview. Which do you agree with and which do you think are mere conjectures? Please drop your thoughts and observations in the comment section below. Thanks for watching.